All right, so welcome everyone. This is week one of the 2026 trading season. I'll call it the trading season. Essentially, this is outlook number one. As I've stated in the previous outlooks in 2025 in December, that I will be fully transitioning to futures. That's not entirely true. I still have a couple open positions as I still move funds from my CFD accounts on CFD, but for the sake of analysis, everything will be done from the futures lens. So looking at the futures, just to give some housekeeping, the tickers are slightly different. So the Great British Pound futures, that's equivalent to the GBP USD, or I should say like the GBP USD on the CFD side. The Euro FX futures are 6E1, the ticker symbol is the Euro USD. Gold futures GC1 is gold. NQ1 is the NASDAQ or NOS 100 or US 100, whatever broker you're trading on the CFD side. And YM1 is US 30 or the Dow Jones Industrial Complex. Or, I'm sorry, Dow Jones Industrial Index, not complex. Right. So this is what I'm going to be looking at on the future side. On the micro futures, where I will be doing a few executions to start out the year as I continue, to transition my funds and have that capital built up until I fully go onto the futures side. This is where I'll be pretty much executing some trades for right now, especially on MNQ and MYM1. Um, but yeah, this is it. All right. So these are the pairs that I'll pretty much be looking at primarily. Though I will say that I will be looking a lot at the NASDAQ and the YM1. Those are what brought me over to the future space in the first place. I really like trading equities or indices rather. So I will primarily focus on NQ1 and YM1, but I am teaching some people how to trade right now. So I'm going to, still have 6B1, 6C1, GC1 and do the outlooks for those. And if I see opportunities on those, I definitely will be trading those as well. But my primary focus, my trading perspective will be from the indices side. So looking at NQ1, YM1. So without further ado, let's go ahead and get into the outlook. So 6B1. All right, so I'm going to go ahead and clean this chart up. This is fresh. We are looking at everything as fresh as can be. Okay, so on 6B1 from the macro perspective, this is the forest. And so what I'm looking at here is trying to define what my overall bias is going to be. This will be from the price action lens. I learned from RCV, adapted, and took the content and formulated it into my own perspective. So what you're going to be seeing is how I view the markets from my own perspective. So usually what I like to do is start from 3-month time frame window to bin or see everything. That's pretty much how I like to start, just to do things. So if I'm looking at it, it's really from the month of December, November, October. And if nothing really makes sense to me as far as the price action, then I will extend back another 3 months and so on accordingly until I can frame get another frame as much of the forest that I can to make informed decisions about my bias. And so I'm not going to do all of that right now because we already know from the previous outlooks what the bias is from the CFDs. It's pretty much the same thing for the futures charts. And so 6B1, we know that we had a overall bullish run here beginning from this low all the way up to this high here, that then transitioned into a bullish range existing from this low to this high. Then we actually moved lower here, and then we actually transitioned from a bullish range into a bearish run, and it was recently solidified once we took out this high here in the bearish run. So this solidified the pullback. This also solidified our leg. And so now our opportunities or our bias is bearish, and what we are looking at is opportunities to sell inside of this current price leg existing from this structural point here down to this liquidity point here. All right. And so now what I'm looking at was also, or what I was looking at for opportunities is on the premium side of this price leg, notably what I would consider the only unmitigated area of interest is this price gap here. Now, I'm not going to go deeply into, refinement of this price gap, but this is what I'm seeing from the daily perspective. So now that I have my bias overall, I've defined that from the daily perspective, I've defined my area of interest, but I'm not really going to be doing that from the daily. This is just, reiteration of what we had before. But now what I'm going to do, now that I have my bias and I've solidified the pullback, what I'm doing now here is going down to the 4-hour time frame to define my opportunities and areas of interest, looking for opportunities to play both sides, bullish and bearish inside of this price leg. And so because we had already identified the price leg that we were looking for, now what we need to do is, if this bearish run is going to continue, and now that we've got the pullback solidified, I want to assess where price is likely to draw towards. And understanding the principles of price action balancing, markets balancing, understanding that price is going to return to the origin of the move in which all of this price action came from, I understand that the logical thing to do would be to assess how the price developed starting from the highest point if we're bearish, going lower. So looking from the high to low, what I want to look for is the mitigation of candles based off of inefficiency objects, which are my sponsored candles and price gaps. And so as I move down the price leg, going towards from the structural point down towards the liquidity point, I want to look for the inefficiency objects existing inside of this bearish run here, and then identify the origin of the move to see if anything is left, unmitigated. And we've already discussed this, that this was pretty much it. This 4-hour this 4-hour area of interest existing here as a price gap, but primarily it's going to be, this candle here. That's my 4 area of interest, and it's based off the fact that we have this action of mitigation here, where we have full, mitigation of this price gap here that led to the generation of this sponsored candle. But this is my area of interest, which led to full, development of this bearish price run, and that left inefficient pricing here and inside of that candle. I'm not going to go deeper than that, but this is the candle that I am looking to, use for potential trade opportunities, and expecting continuation of the current macro bias. What I would like to see is a response from this 4-hour area of interest to move lower, continuing the bearish run at minimum towards the low, which is this liquidity point, and then at lower areas there. So this is what I'm seeing on 6B1, or the British pound futures. So going back up to the daily, moving on to 6E1, we're in a similar situation. Going to go ahead and clear the charts here as well. All right, so 16.1, like I said, it's pretty much the same structure. There's the price action slightly different. You can see here that we actually have a little bit more push down into this wick here, rather than on the CFDs we had mitigation of the price gap itself, but the price action is pretty similar. So instead of seeing just the price gap here, we actually have a wick mitigation, which was a liquidity draw, mitigation of liquidity draw, which led to mitigation of this price gap here, and that we still have the same price action moving higher. And then we also have the mitigation of this liquidity point, which is the latest, liquidity point mitigation here. And so what we are expecting is continuation of this price leg to move higher, and this current bullish run to continue. We're looking for targeting overall this liquidity point here, as we are in a macro state of a bullish run. And so now going down to the 4-hour time frame, we want to assess the price action, moving higher, not necessarily looking down here. Everything looks pretty balanced. All the wicks are mitigated, all the inefficiency objects are mitigated as we move higher and higher and higher towards this liquidity point. And so if there is any sort of pullback in this region, I would need to see, or I would want to look for actions of mitigation that caused inefficiency to be generated, or a liquidity draw as well, which is action of transition or action of reversal, really, to see if we, generate any sort of liquidity. So any sort of sponsored move to generate inefficiency in the market is where I want to look uh, for opportunities here. And so I'm not really looking at opportunities right now, but that's essentially what I want to do here. Overall, what I want to draw your attention towards for 61 or for Euro FX futures is that we are bullish. All right. Moving on to gold. All right. So once again, clearing the charts. Gold has reached all-time highs on CFD and futures. So this was the all-time high of gold. We had a break of structure and then an immediate pullback to clear out a potential low here. So as of right now, what this is looking like to me, if we have, low, high, low right here, this is looking to me more like a liquidity draw rather than a break of structure. So all this could be as an opportunity to capture some sort of move to move higher, continuing this overall bullish trend. And that's what I'm seeing on gold right now, not too detailed. Okay, on the NASDAQ, on NQ1, we are still inside of a bullish run. We, broke all-time highs earlier this year or previously this year, 2025. We broke that here at about July or so, and that was the generation after we broke this high. That was the creation of this bullish run, or how I would see it from my perspective, established the bullish run, and we've been in a bullish run ever since. We've had multiple draws on liquidity. The most notable one was actually, I think, in October or November. Yeah, so it was in November here, which led to this draw on liquidity shifting our structural point from this low to this low, and then we have drawn higher and we've messed around inside of this area ever since. So as of right now, the bias is still a bullish run. We should still be looking for bullish opportunities to continue this run, with the ultimate target being this liquidity point here, which just so coincides with being the all-time high on the NASDAQ futures charts. So this would be my liquidity point. This is what I'm looking for. As of right now, we are currently inside of a price leg existing from this low here to this high here. So what I want to look for are opportunities. And as I assess the price action, moving higher, beginning from this low to here, everything seems balanced except for this point in which it was mitigated immediately, or not immediately, but it was mitigated here as my area of interest. We tapped 50% and then ran higher, and as we ran higher, we mitigated. The price action balanced itself as it moved higher. And notably, there's nothing inside of this area that I would be looking for as an area of interest, because there was no action of mitigation that would have sparked any inefficiency to be generated. The only inefficiency there was this area of interest in which it mitigated, and as we moved higher, we can see that the wicks balanced itself as we, ascended higher. So anything moving forward, if there isn't any inefficiency, right now, what I could see is potentially, this wick mitigating this price action here, which led to the generation of this price gap. I could potentially see that, and then that's pretty much it. Other than that, it would just be the immediate price action existing inside of this consolidatory area right here. But other than that, this is pretty much balanced. So the immediate narrative is continuation from this area towards the high. The secondary option I would see is pull back into this area of interest here, giving us opportunity to push higher. And then the counter option is just completely break of this price action here, aiming towards this low, um, that was generated based off of the mitigation of this 4-hour area of interest. All right, so that's what I'm seeing on the NASDAQ currently. All right, and then on YM1, or the Dow Jones chart. Looking at the daily, similar to the price action on the NASDAQ, we are in a bullish run. We recently had a mitigation, excuse me, we recently had a pullback into an area of interest, which was pretty much this wick here, but it's not necessarily something that I would look at. So I just chalk it up to just mitigation of something on a higher time frame. And then we led to the generation of this price leg existing from this low to this high, breaking that high, and then because we had, going from low, high, low, high, low, high, we are still in this bullish run. We have yet to, solidify this price leg from this low, so on and so forth. So what we could be looking at is either a rollover to take out this low, thus solidifying the pullback, and then which we would look for mitigation of inefficiency and price action lower, or we would be looking for immediate continuation to take out this high, considering that we have low, high, low, potential unwillingness here, and this potential unwillingness will be solidified if we transition once we take out this low, or is this just low, high, stall in price, and then we move higher? Well, if the bullish trend is solidified on the macro or on the daily, then what we should be looking at now is the 4-hour time frame to assess how that price action is actually going. And so this region right here is actually that low, high, low, high, low unwillingness as it stands right now. And so immediately what stands out to me is if we have that low, high unwillingness is the fact that we had some sort of draw on liquidity here in the previous price leg, or the previous, internal price leg there, and then we had another draw on liquidity immediately after that. So we had two draws on liquidity that led to bullish price action continuing. So if that's the case, knowing that the draw on liquidity is an action of reversal or an action of transition of state. If this price action here on the 4-hour was bearish as of going down here, and then we drew liquidity at a significant liquidity point or structural point here, we see that we have a transition going low to high, which failed. So we had unwillingness generated. Then we drove lower. And instead of breaking structure, we had another liquidity draw, which actually did lead to the break of structure of multiple highs. So we should be looking for continuation of bullish trend. But that all being said, looking at how the response is here to this area of interest on the 4-hour time frame, looking to the response to this 4-hour interest, which was following an action of mitigation of this inefficient pricing that was generated, this is giving me a little bit of concern that we may be looking at potential continuation of price action moving lower, but we have to remember that this needs a lot more support to transition the bias from the higher perspective. I need to see, in order for price action to actually, give me that confidence to take substantial trades, I need to see the break of this low and then price action to pull back. I can't just go off of the fact that we had an action of mitigation here and then a generation of an area of interest, because this area of interest is actually on the counter trend side to the bullish macro narrative, which is a bullish run. So even though we're getting a very valid response from this immediate action that happened here at this low is also, as of right now, seen as a potential draw on liquidity. So all this could be was just an action to release some sort of liquidity, sponsoring a move to, generate some more liquidity here, causing a draw on liquidity, and then looking for a price to press higher ultimately. So as of right now, that's the narrative that I'm sticking with, is that this was just an exhaustion of a counter bias area of interest, and that led to a draw on liquidity. And now I should be looking for opportunities for price to actually continue the pro bias or the bullish run from the macro perspective, aiming for the all-time high here, which just coincides with this liquidity point. All right, so that's what I'm seeing on YM1. I hope you guys gain some education from this. See you in the next one. Peace.